this is Martin from Secret, the channel for learning about trading and investing. Welcome to weekly stock market analysis show, where we understand how the previous week went by from the technical charts and then plan for the upcoming week's trade. And that's starting from tomorrow, April 8th, 2024. So let's get in to see the charts and then we'll come back to the summary of that. Okay. Here we have the weekly view where multiple flag breakouts from a couple handle breakout in the beginning can be very well seen. Its trending is absolutely on weekly charts. Breakout 1, breakout 2, breakout 3, and that's what is happening now on both indices. This is another weekly view. Price is steadily moving up towards the top of a trend line channel of Nifty, and price breaking out of a flag pattern and then slowly moving towards the top of the trend line channel. So the price is well within a channel of trend line. This is the daily view where you can see that market is consolidating, then breaking out, again consolidating, breaking out. It's happening on both indices. This is the candlestick view of last week for the Nifty, and right side you have the Banknifty. Look at this. Nifty, as we know, it had been rallying and was making all-time high very often, but Banknifty was what was not performing. But that has changed this week with a wide range bullish candle with a gap up, and it's very close inches away from the all-time high. But Banknifty last week went very volatile, but at the same time in between it made new all-time highs about 22,600. So now that both indices are performing, bulls are on fire. But one thing that we have to be careful about is that both indices, even though very close to all-time high, because of the same fact, is at a resistance zone. Look at this. So whenever there is a resistance that's coming, there is a possibility of reverse that could come in, right? There is a possibility of more consolidation around that zone before it gains energy to move, or it could break out just like that. So this is unpredictable, and that's what we have to watch out for next week. Look at this daily candlestick patterns. So here we have a small body on the Nifty, which any small bodies are indecisive in nature, and the wick size on both indicates the big bear and the bull fight that happened. While in the case of Banknifty, it is wide range, straight gap up and bullish weekly. On the daily, we can see that it's again a kind of consolidation that happened inside the big Thursday move that happened, where market dipped and recovered quickly with very wide range. So the big size of Thursday indicates the kind of move we had. So the last 5 days, what has happened is it has moved down and it has made a V-shaped recovery, and the last Friday's candle indicates it's a consolidation inside the Thursday's big move candle. So Nifty was very volatile last week, very volatile. At the same time, it made all-time highs. Banknifty was not that volatile, and it was breaking out on Friday, that you can see, with a wide range bullish. Even on Thursday, it did not. It went volatile like the Nifty, but not as much. And at the same time, it managed to close above that neckline of this cup pattern, right? So it's a breakout on Nifty with wide range moves and a volatile all-time high move on Nifty. So both of them are bullish. Now look at this Bollinger Bands on the daily on Nifty and Banknifty. Left side Nifty, you can see the expansion has begun, but it's not walking on the bands yet. So definitely bullish, and the expansion upside of the Bollinger Bands indicates more up move could be expected. But look at Banknifty, it has expanded on the upside Bollinger Band, plus the price has climbed down to the band and walking on the band. So it's extreme bullish. That's what Bollinger Bands is saying. More price moves towards the upside is possible with the bullish bias, because it's greater than and far away from the median of the Bollinger Bands at the 20 moving average. Before we come to the support resistance levels, let's just summarize this quickly. So we have new all-time highs on Nifty, but it did happen with very volatile moves, and Nifty managed to close green with the last biggest correction was only 4.5%, and it has formed a small body indecisive, and it's kind of spinning top, and if at the very top of the rally can be dangerous if it is confirmed with volumes, but it does not look like that as of now, given the fact that everything is bullish and Banknifty auto coming in the picture. So it's a velocity pose 186 point, no, slightly less than 1% of up more on a week-to-week basis that we can see on Nifty, with managed to close above the weekly expansion moving average of 20 as well, and it's nearly 34-35% of breakout from the cup and handle and the multiple flag patterns that we're seeing. Banknifty gapped up and broke out of the resistance on previous week towards the new all-time high. It's hardly 50-60 points away from the all-time highs, and it's closed green with 2.88. That's 3% nearby, up more of 1,359 points up. It's closing above the weekly expansion moving average. Remember, the rally had been 26% earlier, with a deeper cut of 8.5% of retracement has come in this ongoing rally with the cup on handle and multiple flat breakouts. And if we had been lagging behind, not performing earlier, but that has changed this week. Nifty, the daily charts can be seen as an absolute close, a small body inside but consolidation, absolute flat close, absolute flattish close within slightly negative 0.95, 1 points down or something. So it's indecisive in nature in the case of Nifty, but still managed to close above the 20 expansion moving average. Banknifty on the daily charts was breaking out absolutely on Friday with 432 points gains. It's nearly 1%, and formed a wide edge bullish candle, closing above the 20 expansion moving average. So market is at account highs, which it heated up, and you can see that in the volatility that come in that zone, and Banknifty has outperformed and Nifty, and then it's inches away from making a new all-time high after a long period of time. Probably they make that in Monday, but since it's at a very crucial all-time high levels, both indices, it's heated up, and there is a possibility that markets decide to consolidate, take some more time before it breaks out. So that possibility is also there. There is also a possibility of a real breakout from here that could take easily price another 400 points to the 23,000 ahead, and probably to $50,000 for the Banknifty. It's a possibility both of this could happen. Fingers crossed. Now, we can only talk about probabilities. We cannot have any confirmations. Probabilities indicate that it's probably showing more weightage towards the bullishness side. And Bollinger Bands we've already seen. Let's move ahead and see the support resistances for the next week. So the first resistance would be to take out 22,620. That's where the new all-time high was made on Nifty. After that, it could find resistances all the way up to 23,000 at every 100 points or 50 points. It's an uncharted territory, but price can usually move towards 23,000 because there's a lot of space left on the top of the trend line channel, which has been hovering around since a long time. Now, downside, the first supports could come in at the 20 expansion moving average at 22,250 nearby zones, and then after that, 22,000 is a big rounding number. Support also is a 50 expansion moving average zone as well. If that is breached, price can go to the previous swing lows at 21,500, that zones, right? And below that, 100 expansion moving average also is coming very close to 21,500, so that will be crucial. There is an exponential moving average that's coming at 21,900 zone as well. Not an exponential moving average, a Fibonacci retracement level of 20. Right, so those are the supports on downside. Resistance on that side is also seen here. Now moving ahead, if you look at the same support resistance levels for Banknifty, you can see that it's broken out of that consolidation zone, and the first resistance above would be the 48,636. After that, naturally 49,000 big rounding number would be the resistances, and then it has space to move towards the top of the blue trend line channel, where it is up towards the uncharted territory, at least till 50,000. There's space in the trend line now on the upside. So every rounding numbers, it would find some resistances because of profit booking, but that's how we have to take it. Now downside, you have the supports that can come in at a gap at 46,676 zone, and then exponential moving average support at 47. 228 can also happen, but 48,000 downside will be rounding number. Supports can come in there. It's also very close to the breakout zone from where the market has moved up on Friday. So that 48,000 will be crucial support. If that is breached, the gap can help at 47,700 nearby zones. That also doesn't help. We can find supports at 47,228, as I said before. And if that is breached, then can go to 47,000 medium support can come in because of rounding number, and then 46,836 is the 50 moving average, and then you can fall further down at 46,360, and then 46,000 rounding number likewise. That's the supports and resistance on the Banknifty that we're seeing. Let's move on and try to study the momentum and the trend indicators, so the weekly and the daily time frames on both indices. Left side you have the Nifty, right side you have the Banknifty. On the left side you have the weekly analysis, both indices. Right side you have the daily analysis on both indices. So the weekly analysis showing that it's bullish and rising up, no doubt about that. Weekly analysis, right, it's bullish, absolutely bullish momentum as per the RSI indicators, and there is a small pullback of momentum that is seen on the daily short-term charts of Nifty. A small pullback, right? There is a flattish momentum that is coming. There is a strength. The momentum is absolutely bullish above the RSI 60, but the the strength of that is slightly paused. That's all, right? So this is the summary of what the momentum and the trend indicator. The trend indicator that we are using is ADX. So bullish momentum for sure, no doubt about that. Slight flattishness can be seen on the short term on the Nifty. Otherwise, everything looks fine. So bullishness all over there. Trend also bullishness. ADX indicator is in the DMI positive bullish zones and rising up in the short term, and it's again bullish zones, and in the case of weekly charts as well on the Nifty. Banknifty also, it's bullish on both time frames of higher time frames of weekly and daily, both, right? So there is a little lack of strength that can be seen in the weekly bullishness in the Banknifty. So otherwise, so in short, bullish momentum, bullish trend, both indices, both time frames, right? The next section talks about the volatility and the opportunity analysis. Volatility, we had seen some part of that volatility expansion on the Bollinger Bands. Now we would see the India VIX, the volatility index, basically that's found useful on the options and derivative trading. Especially it's cooled off. Actually, it's crashed to 11.77, back to the low. It's cooled off to 11.33. Actually, it's a low volatility regime, and it's almost 12% of crash or cool off has happened last week. So that's a good factor. When the price moves up and volatility cools down, it's in power. It's what is expected, and the premiums will be less. Option sellers will not find it very attractive, not only because of less premium, but the implied volatility and the realized volatility spread difference is hardly 2%. It has to be at least 50%. But actually, implied volatility has more to gain something for the DK benefits for the option sellers. Now, IB personal also dropped from the 90 levels to the 30. So option sellers will find it slightly hard at this point in time for personal bets on options. Anyway, VIX has cooled off, which is another indicative that that the markets has potential to move further up. But given the directional results are coming in the coming weeks, there is a possibility that VIX can find some bottom and then spike up from there big time towards back to the 16 or 15. That's possibilities there. So you have to be careful about that. That may happen after hitting the 23,000. Never know, but that possibility you'll have to keep an eye on. Now, open interest of the options and the futures, if you try and understand, you have seeing in the Nifty that is a long unwinding, which is bearish in nature, and Banknifty is long built up. This is what happened on the Friday. The Friday's build up of the futures we are talking about. So Not that encouraging from the case of Nifty on the futures OI, but look at the options OI, the PCR. PCR, the Nifty is 0.90, which is not bullish enough, but not bearish. It's very close to the bullishness of 1. 1.3 is clearly bullish on the Banknifty, the put-call ratio. So overall, you can say that it's Banknifty absolutely showing bullishness, and Nifty is showing bullishness, but not enough of that. It's what we can summarize as per the open interest analysis for the futures and open interest for the as of now from the data. So this is the option. So how the graphs are showing. You can see that huge support to see is seen at 48,000 on the Banknifty, and a big resistance is seen at the 23,000. So that's why huge supports are at the Banknifty. Looks like it won't really break out with kind of supports that is shown by the option writing data on the put side by the as of now on the Banknifty. So let's look at the levels for the April 10th. It's a truncated week where the Banknifty and the Nifty both are expiring the same day on Wednesday, as Thursday is a holiday. Nifty, so the decay can happen faster. So 22,500 is where the highest put writing is seen. That's where the supports are there. So market is very close to that. That's right now. Just climbed to all-time high at 22,600. Now the highest resistance is seen at 23,000. Right? The second highest put writing is at 21,500, but is very far away. And then second highest call writing is at 22,800. So quite far from where it is right. Another 300 points from here. So Banknifty, the highest support is seen at 48,000. That's very close. And 50,000 is where the highest resistance is seen. So Banknifty definitely has a lot of space to move. And so that's 2,000 points out there for another 3 days before we expire on the weekly. 47,000 is where the highest put writing is seen, and 48,500 is where the second highest call writing is seen. That's how the data is. PCR and futures we already seen. So overall, if you see, there is bullishness that can be seen in the futures and options, open interest, and the PCR, and the levels also indicates indicates good support levels and good range. So that's what we can make out, right? Okay, let's go ahead. That's about open interest, volatility, and all that stuff. Let's get to see the sectorial indices, that the major ones, the major 6-7 of them. So IT sector has been not performing comparative to others, but this week we have a 1% up move, and it's in decisive close. Considering the fact that the US markets are also close to that. So the momentum is sideways and falling. Weekly also its momentum is sideways and rising up. So the short-term momentum on the daily chart sideways is something that is that's more bullish in nature, because it seems like it's sideways falling and then taking a support, at the, actually it is IT index is a record in the short term from bear zones to the sideways zones, and taking a range shift kind of momentum positions in the RSI. So it's kind of bullish. It's possible that it can move further up, but as of now we'll have to wait for taking long positions, because of the fact that it's still not in the bull zones as per the RSI momentum indicators. Now the metal is 5% up. That's what has recovered the most last week, along with the reality, which has moved up 4.1%. And we can clearly see that the IT, pharma, and FMCG, these are the three sectors which are still not recovered, despite the big moves that has happened last couple of weeks. And we'll have to wait for some more time before we take it. And we have seen that there is indecisiveness in all of this. IT and pharma, FMCG are defensive stocks primarily. They all are slightly indecisive and kind of sideways, not fully bullish enough on both time frames. So, and it had a indecisive flattish close this week. So, other than that, the metal, auto, reality has performed, and these three sectors, long positions can be taken, and reality and metal did recover 4 to 5% last week, right? And auto has have a small industry close, but a 1% up move has happened, and that's sufficient enough to keep it in the bull zones for good time frame. So that's a kind of move. It's a mixed bag as of now. Sectoral indices have recovered and heading towards the bullish zones. That's what we can see. Right, ID index is having a cup and handle. It has been falling down. It seems like it's taken a pause, and then probably it can break out from here with a cup and handle. This is the inverted head and shoulder on the metal, and it has taken a support of the RSI momentum and then bounced up. A lot of space to go before we hit the target of the inverted head and shoulder. As of now, things look fine for the metal. Just record a lot. Auto at the top, we have to still be cautious, maintaining bullishness, but we need to be cautious because it has pulled back and immediately recovered. Not much of retracement has happened, and it is vertical up moves. Pharma was consolidating, and it looks like there is a chance that it can break out from here. Momentum is bullish. FMCG has been retracing, continue to consolidate and sideways. It's taking its own sweet time before it can move up. Reality is pull back slightly and recover quickly in 3 weeks. Momentum is absolutely bullish, taking the support of the RSI medium term, and then bounces up and looks so the top of the trend line channel, just like the auto, so you have to be slightly cautious there. Now next we are trying to understand what the heavyweight stocks that contribute maximum to the index are performing. HDFC Bank is after a long time showing a solid green wide range candle with volumes and ferociously trying to move up and hit the RSI 60 above. Looks like it may. So it's heading towards the top of the channel once again. Will a breakout happen from $1,700? So Banknifty, major contributor for Banknifty must have been this move that happened last week on the HDFC Bank. Reliance Industries has been consolidating, momentum still bullish. There is a divergence and positive bullish in nature also seen there. It can break out. It's consolidating since last several weeks. The correction was quickly recovered. Last week was a consolidation week. The bank also is consolidation, but weekly basis it's a bullish zones. Trend also is bullish, absolutely. IT sector, two stocks, the Infosys and TCS. Infosys seems to have climbed back to the sideways zones in the short term, and bullishness is maintained, and sideways zone is maintained in the weekly charts as well, with price and momentum slightly dipping last week because the US markets are trying to travel. But TCS is moving up with a solid green candle. It has a lot of space to go to meet the target of breakout of the flag. Same with Infosys also, but right now consolidations is what probably is happening. Black Bank, as usual, it has been going up and down in a range. ITC has recovered and seems like some big buying is happening. Those price levels are 400 and above, and it is taking its own sweet time consolidating before it makes the flag breakout at another 50 points from here. So got to keep a close watch of that. This may be buying opportunities for Banknifty, but it has recovered and then it's a sideways. So what's in the bull zones is the Reliance and the ICICI Bank. Others are all in the sideways, and TCS also, right? TCS, Reliance and ICICI Bank is halting in the bull zones, while HDFC Bank is trying to climb back to the bull zones, and ITC is also trying the same. But if he's giving some trouble, Kodak is a contrast stock and it's consolidating. So that's how the heavyweights are. Not bad, good recovery and good support from major big heavyweight stocks there. So mid cap, small cap was creating a lot of trouble in the mid of March, and now it is complete recovery in the last 3 weeks on both. You can clearly see in the last 3 weeks it was recovered and back to the all-time highs. Good news. Institutional participation last week was disappointing. It was nearly 4,000 crores, 3,800 crores in FI selling, and no buying from the FI. So net to net on the cash, right? So that is what is lacking. So FNO also, it's bearish. FIs are bearish, while prop traders are mildly bullish, while bearishness is there with the retailers. So Net longs and derivatives from the 5-day side also has moved down flat last week. So for institutional participation was not that great, which is a worry. Probably that was because of the RBI policy and the Fed speech outcome and all those things that came. Market is probably waiting for the Fed interest rate cuts that can happen from the next meet and the quarter results as well. We never know. Now let's move over to the global markets, global commodities, global markets in the sense US markets, commodities in the sense gold, currencies and currencies separating, commodities in the sense gold and oil and currencies. So US markets, gold, oil and the currencies. Beginning with the currency, the dollar index has cooled off 0.26% and closed at 104.28. We had a spike but it got cooled off and sideways momentum as of now, sideways and falling. Now rupee, the USD INR has closed red with flattish red of 0.08%. It's at the top of that ascending hedge within a trend line channel ready to break out. Rupee is as weak as it can never be, remains to be in that same scenario. It's been managed by the Reserve Bank for a very long time and continue to be doing that. Right? It's an ascending hedge, it can break out or break down at any moment. But it is being managed, right? That's what is happening. Now crude oil is in trouble, it's showing some trouble, it is breaking out, it's a 4.3% up move. And it's at the top of the trend line channel. The breakout from here would mean trouble for an oil importing country like ours. Momentum is rising up and it's in the bull zones as per the RSI. So look at gold. Gold is hitting all-time high 2329 at all-time high. It is at how much percent? It's 17% breakout from the last week low, and it's a 4.2% move that has happened this week. Right? Absolutely, this is a 17% move from the bottom, breakout all-time high. So crude oil is rising up, breaking out, trouble. Gold is at all-time high and continue to break out. Markets at all-time high. Is gold spiking because of price? No, because as a transition to new safer haven is happening? Question. Crude oil spiking up. It's going to hit back at the market somewhere. Hit back at the economy and eventually the market somewhere. So these are trouble points. Currency is not in great shape. Europe remains to be weak and getting weaker each day. So that's not good news and good global views out there. Combine that with this global markets, US market, the Dow Jones, S&P 500 and Nasdaq. You have a deep red candle on the weekly basis that is formed from the all-time high. This is a retracement that's going to end up soon to consolidate and then further move up, or is it a retracement beginning which could extend further down? Market shows that it's a red, beginning of a red at the top. So question mark. All are bullish, continue to be bullish at all-time highs, momentum bullish, trend bullish, but there is a possibility that things could break on from here. So you ought to be cautious about this fact. Yeah, hello. So just to summarize the global markets, currencies and the commodities, we can see that the rupee, the currencies in bad shape, the rupee is continues to be weak and then being managed by the central banks, and dollar is also spiking up and then cooling off. It's at rising. It's at a higher level, you can say. Crude oil is spiking up. It's not great for oil economy like ours. So crude oil being too much high is not that great always for oil importing company, a country like ours. Gold is also spiking up, so there is spiking up and all-time highs and breaking out like anything. So that gives a doubt that probably the price, probably the the money would move in to safer havens like gold. Right? US markets are showing red. There is a retracement possibility. So though public news are not great with respect to all of this. Right, that's something that we already see. Now, stock picks and action for the next week is Godrej Properties. It's having a rounding pattern. There is have tight stop losses. Reason for the trade is momentum and trend bullish on the weekly time frames with pattern breakout possibility. appetite stop losses, and volumes are also good. That's Godrej Properties. The realty index also moved up substantially last week, around 5% or something. Now, Voltas is a consumer durable Tata company. The soaring heat gives a reason for the for the sales to improve and profits to improve. That's what the market is seeing. Solid bullish candle with the huge volumes, momentum in the trend indicators, RSI and ADX are bullish and rising up, and then the pattern is also getting into some kind of rounding pattern breakout after the consolidation breakout that has already happened, right? Maybe slightly late. You should have caught it at the 1100 levels, but slightly too late. But still, there's a possibility that it can hit the all-time high levels, considering that another 2 months of summer is still there. So this can be a swing trades, both of them, Godrej Properties and Voltas. Now, another actionable for the next week is the payoff is the weekly options Nifty strategy, which is a bull put Canada spread. So basically, we are shorting 20 to 600 put at 150 rupees, and then buying a higher 20 to 500 for the upcoming week. That's the 18th April week. So it's a calendar bull put spread. It gives reasonable risk reward and break-evens, and the range of that is good. And property also about 50%. The margin requirements are very less, increase your capital size as per your risk appetite, but it gives a reasonable range at this point in time. That's the only thing that can work on. No direction may not work at this point. That's why directional trade, with the calendar would give the volatility advantage as well. So that's it. After having seen the action for the next week, let's try to get up and wrap it up. So the market has moved up to this week, and in fact it has made new all-time highs as well, but it was very volatile while making that happen. Although the market has maintained the price gains, the momentum of the trend, and it's performing banking index that has also broken out on Friday, and both indices are meeting the greater than 20 exponential moving average. So with the higher low pattern and all of these factors that we already discussed, we can summarize that probably market is heading up, and it's an ongoing rally of 26 to 35% with multiple flag pattern breakouts from the cup and handle, and retracements it's ranging from 4.5 to 8% has happened. So we'll try to see what is in favor of the bulls and the bears basically. So bullish momentum in the trend and greater than 20 weekly exponential moving average price close. Multi bands upside expansion, all-time high levels on the Nifty bank index also seems to be heading out there, right, with respect to the price. Index is cool of 12%, higher low pattern is there. Bullish Banknifty futures and options open interest. Absolutely bullish on the case of Banknifty. Mid cap and small fact indices are recovered completely. Sector indices are recovering back to bullishness after having dipped slightly in the short term. And heavyweights are also, none of them are in the bear zones as of now. So what's in favor of the bears is the institutions are not buying first. US markets in red, and there's probability that it can raise more. The correlation is not great for the Nifty, and crucial resistance zone at all very close to all-time high. So there's a possibility that it can hit resistance at this point, both indices. So these are all factors in favor of the bears. So markets are at record high with the bank index also support coming in, and at the same time it's in a resistance zone because it's a very all-time high where profit booking resistance can come in. So we'll be cautious about that, and then it's up to the market to decide whether it wants to consolidate therefore or make a straight breakout or raise some more and then break out. It's all up to the market, so keep a close watch. But technically the charts are bullish, so it's mild bullish, mild because of the fact that it's at a resistance zone. So global cues like Russian inflation, interest rate, COVID, war, and all of this can come in any time, and then you can screw up the technical analysis, and black swans has to be handled with the risk management along. So the next week the levels are 21,700 to 23,000 for the Nifty, 47,500 to 49,000 in the Banknifty. So as long as it's 28,000 and 48,000 is maintained, there can be a possibility of continuation of the rally. The next leg of the rally is possible. We'll keep close watch on those levels as well. Okay, may consolidate in this range, there's no problem. Right. Now, you do always use hedges. Keep that in mind. And complete risk reward strategy is what we are doing. Non-directional strategies can be taken, or vertical spreads can be taken when there is no much advantage from pre-main lows. Right. High volatility can be expected, of course, because of the fact that it's at a profit zone, just like how we have seen how Nifty performed. We did that on Thursday. Right. So all that things can happen. So hedge your strategies for any potential risk. Manage your risk. Have portfolio level stop losses. Manage your risk is all that in our hands. Technical analysis just to uh, understand the probabilities of resistance and supports that can come in. It's only probability study, not a guarantee, right? So whenever there is a dip coming, investors can put in money with SIP investments on good quality stocks for long-term investment only, right? Or you can in the tips you can go for cash good pools and covered calls and all that strategies. Playlist, check out that. There are a lot of stuff in there. So I have to summarize. The market view is mild bearish. It's at all-time high levels. It's a resistance zone. Net action moves are possible. At the same time, it could face. It would take its own sweet time to consolidate and then do that. Everything is possible, but it's a very crucial zone. All right. So option buyers wait out for that big breakout. Option sellers will have to be cautious as to pull back when it comes to selling the option puts. That's all. If you like it and if you have any comments, feel free to do that. If you like, you can subscribe as well. I have other channels also listed down there where I'm more active on Twitter on a daily basis. That's my market view for the next week. I'm doing this primarily for as an exercise, as a homework for my upcoming week trades. So if that helps you also, well and good. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.